Have you been paying attention to what the real estate market has been doing over the last couple of months? If not, you should be. Over the last couple of months, we have seen some of the most dramatic changes in the housing market that we've seen in a very long time. However, it looks like things are finally starting to calm down as we get to this new normal. So what is that new normal? That's exactly what we're going to talk about on today's episode. Hi, I'm Josh Alexander, host of Orange County Housing Market News, your one-stop shop for all things Orange County real estate. On today's episode, I'm going to be going over my August housing market update, and we're going to go over a lot of things. So what's been happening in the market, how that's impacting today's market, and then looking forward, what should we expect during the fall months during 2022 in the housing market? Are we going to see things stabilize? Is it going to get even crazier? That's what we're going to talk about. So without further ado, let's go ahead and get into it. So like I do every single month when we break down the housing market in Orange County, I'm going to be going over three different things. So first, we're going to start off with what the housing market's been doing over the last couple weeks. Then we're going to go into what that means for us today and where we are now. And then finally, I'm going to go over what to expect over the next few months for both buyers and sellers as we enter the fall market in Orange County. So let's go ahead and start with the supply side first. So on the supply side, over the last couple months, we've seen supply continue to go up week after week after week, and that's no different in today's market. So over the last 2 weeks, we've seen supply in Orange County go up by about 6%, and we finally broke into 4,000 homes available in Orange County. Now, as I'd like to do on this channel, let's go ahead and give you some context to that 4,000 homes, because without it, it's really hard to see what's happening. So if you look at 2019, which was the year before the pandemic, this time of year, we had almost 8,000 homes on the market. So you can see that even though we are adding inventory slowly right now, we're still nowhere near where we usually are during an average year for the Orange County housing market. And for those thinking that we're in a bubble and it's about to burst and that we're going to see 2008 all over again, you have to remember that in 2008, we had almost 18,000 homes on the market. So 4,000 today, 18,000 then. Again and again, I'm going to continue saying it. We are in a completely different market than back in 2008. You cannot expect the housing market in Orange County to crash anytime soon. And the last thing I want to say about the supply is that even though we are adding more homes every single week to the market, we're still not adding them at the pace that we're used to, especially compared to the pre-pandemic normals. So if you look at the years 2017 to the years 2019, in June, we added about 11% less homes than a normal year. And if you look at through the entire year, we're still about 16% short of where we normally are this time of year for the amount of homes hitting the market every single month. So again, this is just further evidence that you're not going to see a giant flood of inventory hit the market, driving us out of the current market that we're in anytime soon. Now let's go ahead and take a look at the demand side of things. So on the demand side of things, the big story is still going to be interest rates. Obviously, if anybody's been paying attention to the market, you know by now that interest rates have gone up significantly, to say the least, since the beginning of the year. So in the middle of June, we hit a high for this year at 6.28%. However, since then, we've been seeing interest rates start to come back down, and now they're hovering right around that 5.5 to 5.7%. So they've come down almost 0.75% since the middle of June, and that's contributing to the housing market starting to stabilize. So what do I mean by this? Well, let's go ahead and pull up a few graphs, because I want to show you what's been happening over the last couple months and what's been happening specifically over the last few weeks, because it looks like we're starting to get to a point where supply is no longer going up as quickly and demand has really started to bottom out, giving the market some stabilization from this craziness that's been happening over the last couple months. So let's go ahead and start looking at the supply side first. So as you can see, supply has obviously shot up since the beginning of the year. However, if you take a look at this graph and look at just the last month, you can see that we're not going up quite as fast as we were in the month of June. So it looks like we're starting to slow down. And on the opposite side of things, if you look at the demand curve, it looks like it's pretty much bottomed out. So demand has definitely gone down. However, even though it is currently low right now, it's seeming to stabilize right around that rate. And a lot of that has to do with the interest rates also stabilizing a little bit lower than they were in June. So what does this all mean for the housing market today? Well, an easy way to tell what's going on in the market is by looking at the average time it takes a home to get into escrow, also known as the days on market. So the days on market, especially when we went through May and June, continued to go up quickly every few weeks. So every every 2 weeks, it was going up by about 10 days when we went through May and June. However, we're starting to see that trend slow down. And over the last 2 weeks, the days on market has only gone up by 5 days, going from 67 days on average to 72 days on average. So because we're starting to finally see some stabilization of both the supply and the demand, we're also seeing the market stabilize in terms of how long it takes to sell a home. And that's kind of leading us into this new normal that we're going to be getting used to. So what is that new normal? Well, at 72 days, we are still technically in a slight seller's market. So anything under 90 days is going to be considered a seller's market, where sellers are going to be able to call more shots than the buyers. However, we are just in a slight seller's market. So instead of getting 10, 15, 20 offers on every property like we were at the beginning of the year, most homes are only averaging 1 to 3 offers right now. So if you're a buyer, this is great news because interest rates have gone down and the demand has also gone down, which means homes are more affordable now than they were just a month ago. And on top of that, you have a lot less competition. So buyers that I'm currently helping right now are having a much easier time getting into homes, getting into escrow at fair market value, and not having to overpay for the house. Now, the thing I want to point out about that last statement is I said fair market value. So we're not seeing homes depreciate right now. However, we are seeing homes go for fair market value, or in some cases slightly above. So appreciation is still happening. It is definitely slowed down to a crawl, but it's still happening week by week, and home values are continuing to go up because we still are slightly in a seller's market where demand is still going to be higher than supply. Really quick before we continue, if you're finding this information and content useful, can you please do me a huge favor and hit that like button and subscribe button below? That'd really help me out. And if you're watching this on YouTube, make sure you don't forget to hit the bell button as well, because that way you're notified every single week when I release a new episode. And if you have any family or friends that might find this content useful, please consider sharing it with them. It would mean the world to me. Okay, let's go ahead and get back into it. So if you're currently thinking about buying, or if you're currently looking for a home right now, yes, rates have gone up, making homes more expensive. However, if you can afford those monthly payments, right now is a great time to start looking for homes because you have less competition, you're not overpaying for a house right now, and you're able to get into a place without having to extend yourself and also taking away all your protections in escrow. So a few months ago, if you were trying to buy a home, it was almost expected that you would waive a lot of the contingencies, making it a very risky thing, because if you found something wrong with the property, you weren't able to back out of the deal. In today's market, those contingencies are being left in place in most cases, which means you have more protection as a buyer when you're going through escrow, doing the research phase of looking into what's wrong with the property, making sure it appraises correctly, making sure your loan gets funded. Now that it's a lot more likely to have those contingencies back in place when you make offers and get them accepted, you are much more protected in escrow than you used to be just a few months ago, making it much easier to get out if you find something wrong with the property. So although affordability is definitely down compared to last year, and especially compared to a few years ago, if you're looking to purchase a home, the payments make sense for you financially, you can afford them, you have the down payment you need, and that's going to get you into a place that you want to be in the area, in the school district, and you're planning on being there for the long term, now is a great opportunity for you to take advantage of this slowing market to be able to look for homes, place offers, and take your time. A lot of these homes are on the market for 3, 4, 5 weeks. They're not being snatched up in the first few days and having 30 offers on them. You're able to take your time, look at homes, decide which places you want to place offers on, make them competitive. However, you don't have to overextend yourself anymore, and you don't have to be offering $100,000, $200,000 above asking price to even be competitive like you were just a few months ago. So this is great news for the buyers that can afford to get a mortgage right now and have the financial means to do so, because even though the market is not a buyer's market at this point, it is much more manageable. Now sellers, based on what I just said to the buyers, you might be freaking out a little bit thinking, are we at the top of the market? Did I wait too long to sell my house? Well, you should have put your house on the market a few months ago if you were able to and willing at that point to be able to maximize the amount of people looking at it, as well as when the demand was a little bit higher. However, we are still seeing appreciation happen on a weekly basis in the housing market in Orange County because there is more demand right now than there is supply. So even though appreciation has definitely slowed to a crawl, we're not seeing massive appreciation every single week and month anymore. Appreciation is still happening. So my best advice for you is that you need to be very, very careful right now when you price your home. If you price it even slightly above fair market value right now, odds are your house is going to be sitting on the market for weeks at this point, not days like it used to be. So you need to know the comparable sales and price it accurately when you put it on the market. If you do that, and especially if your house is move-in ready, you're still going to get a lot of interest on the property. If your house needs a lot of work to it, it might be a good idea to start pricing it slightly below market value so you can still draw enough interest in to get multiple offers and eventually drive that price up over market value. But right now, you need to be very careful about pricing because I've seen too many sellers have to do price reductions, and those numbers are continuing to rise every single week as sellers are starting to get used to the fact that we are no longer in this hot seller's market that we've been in for the last 2.5 years. So if you're thinking about placing your home on the market, again, it's still a slight seller's market. The odds are in your favor, but you need to make sure you have the right team around you. You need to price it correctly. You need to have it marketed properly, and that means marketing it to as many people as possible through photos, through 3D tours, through videos. Every way that you can get buyers to look at your property, you want to find an agent that's going to be able to do that for you and take advantage of all those different types of media, so that way you're getting as many eyeballs on your house as possible. So if you are thinking of buying or selling a home in the next couple months, what should you expect the market to look like? Well, as we approach the fall market and kids start going back to school, in a traditional market, you usually start seeing inventory decline right about now, heading all the way through the rest of the year until it gets to its lowest point at the end of December, early January. However, this year, because homes are sitting on the market a little bit longer and a lot of sellers are still trying to take advantage of the market while it's still here, we're expecting inventory in Orange County to continue to climb for at least another month or two before it hits that peak and then slowly goes down for the rest of the year until we get to the holiday season when it drops pretty dramatically. Now on the demand side of things, like I said, typically demand will start to go down as well as school starts, as fall starts, so expect that to continue to happen as we head through fall, which means that if inventory is continuing to go up for the next few months and demand is going down, you can expect the average time it takes for a normal person to sell their house is going to continue to grow longer and longer. So every week that goes by, homes are going to take longer and longer to sell over the next couple months as we head all the way through the fall market. So if you're thinking about placing your house on the market, the sooner you can get it on the market, the more demand you're going to have. So on the buying side of things, you have two things to look forward to. So it looks like rates are finally starting to stabilize a little bit as the market stabilizes, as well as everybody has kind of priced in what inflation is going to be doing and what the feds are going to be doing over the next couple months as well. So as long as we don't get any crazy data from inflation over the next few months and no World War III breaks out, interest rates should hopefully not fluctuate too much. Now, interest rates are very hard to predict, especially right now because there is a lot of things going on, but it looks like at least at the moment, interest rates have stabilized as the housing market has started to stabilize as well. And the second thing you have to look forward to as the weeks go on, you're going to have more inventory to choose from, which means less competition for you, so you have longer to find that home. When you place an offer, again, you're not having to basically sell your first child to be able to get into a house anymore. You're able to place it at market value, leave a lot of those contingencies in place, and be able to get into the home that you want to be in without having to overpay for it anymore. So just to quickly recap this episode, it looks like supply is continuing to go up, but just not as quickly as it was the last few months, and demand seems to have bottomed out and stabilized, mostly due to those interest rates stabilizing as well, which is leading us to a slight seller's market where buyers have more options to choose from, they're placing offers at market value, and sellers need to be very careful when they're pricing their home in order to make sure they're getting enough eyeballs on their property and hopefully getting those multiple offers to help drive up the price of their home so they're getting the highest price for the home possible as well. So I hope you found this content useful today. If you did, again, make sure you don't forget to hit that like and subscribe button. And until next time, stay healthy, stay happy, and I'll see you on the next show. Bye.